Hi folks, welcome to this new video. This is gonna be the continuation of our last few videos, which the first one I posted about ICT market structure, and after that I posted another video about ICT daily and weekly bias. This video will be the continuation of the daily bias, and inshallah it's gonna be a series. Like I may have like another 1-2 videos on that topic as well, because this is one of the most important topic for you to understand and one of the most important thing to master. And if you know your bias, if you have your clear bias, then trading becomes a lot more simple. So let me start the video. I'm doing this analysis on Euro USD. I will use the cable GBP USD as well, starting from Euro USD. As you know that this was a monthly fair value gap on Euro USD, and this candle was just close above it, so it was kind of a monthly fair value gap for us, which should have been rebalanced because price has left behind the liquidity, undrawn liquidity. So we will expect the euro to go to the upside, because on Dixie, as in my last video, I predicted that I am seller on Dixie, and it's already going very well. Keeping that in mind, we are bullish on euro, cable, GBP, USD, and gold. And gold is like it is breaking everything. We are only buying in this entire area, buying. So coming into the point, and we will discuss euros power of 3 daily, weekly, and monthly buys. So this is the monthly FVG. This is at the moment, if this was the running candle, it would have been our drawn liquidity, because price is trying to rebalance this inefficiency. Market has only two things, one of two things. It will either seek liquidity or rebalance the inefficiency. So from the current month, you will see that price is not creating any fair value gap while coming down into this inefficiency. So that's kind of a sign for us that price is now seeking the above drawn liquidity, and it will be a reversal point for the market. Let's dig it deep into like lower time frame, and in weekly time frame we have this relative equal swing lows. Okay, relative equal swing lows, and we will seek the market like from this area around 50% equilibrium, because if you neglect the equilibrium problems, equilibrium issues from your trading, you will be at peace. And as you see, discount, premium price, discount price, and this is going to be our OTE as well. The 61 to 79 is our OTE level, and I personally prefer these two levels as the best and like golden zones for me. So that's the second thing. We are in discount on weekly time frame. We are clearing your liquidity. In daily time frame, we again have the same situation, like liquidity pool, relative equal lows, equal bodies. It's kind of a market maker model that price will target to. Like, it will seek the liquidity of these equal bodies first, give it action, and then eventually the sell side liquidity. And just below the sell side liquidity, we do have fair value gap, even on daily time frame as well, if you check it out, and maybe down here as well. No, it's rebalanced completely, so we have this fair value gap as well on daily time frame. That's it. We do have an overblock as well, the form of this down close candle plus fair value gap above it. So as you know, the rule for monthly, daily, and weekly power of 3 is that you will have to use, if you are anticipating daily power of 3 for daily bias. Then you will have to use H1 market structure shift. For weekly power of 3, you will have to use H4 market structure shift, and for monthly power of 3, you will have to, sorry, for weekly you will have 1H, for daily you have M15 or M5. I personally prefer M15. For monthly time power of 3, you will have to use H4 structure shift. So basically what I personally do is I try to prefer, like I prefer weekly and daily power of 3, and from daily and weekly power 3 I switch to monthly time frame, monthly power 3. Like, as you know, price and time are fractal, so most of our strategies will also work in the same way. So I will convert my daily power of 3 into monthly power 3, and I will show you how. Because if you know those who are connected with me in the group, they know that when I say like this is low of the London until New York, once New York continues the price, then it confirms as low of the day. And if it's in the like on Tuesday or Wednesday, if I see an SMT on Tuesday and Wednesday here at my key level, of course, with power of 3 alignment, then I anticipate this as low of the week. And in the same way, if it's second or third week of the month and I have such a reaction in 4H time frame, then I say it's low of the month. So it's all fractal. You can apply it on any single time frame, and I prefer higher time frame, monthly, weekly, and daily, and even H4 to some extent, but not most of the time. So let's continue the month. Where is our? It's Feb, and Jan 31, Feb 1. So I will try to catch the weekly power of 3. And from weekly power of 3, we will shift our bias to monthly targets, which will of course be these drawn liquidities, equal lows. Although it's a shallow sweep, but it's still liquidity for us. Market makers manipulate in like with heavy bulky candles or huge wicks. Feb 1, and into lower time frame we will, as we are now working on weekly power of 3, so we will use 1 time frame. And I personally do two things in that case. Like if I want to calculate daily power of 3, I wait for the Monday to complete its action. Then on the Tuesday opening, I use the power of 3. If it's a weekly power of 3, then I wait for, sorry, on Monday, on daily time frame, I use for the Asian session on Monday, and weekly I wait for the Monday to complete its price action. So if it's like, okay, it's our week open and our month open as well. Oh, no, it's 31. Yes, okay. Monthly open plus weekly open. So I will wait for the second month after Feb, second week after Feb. Okay, it's first Monday of the month. So I will skip it out. First Monday, 18th. First Monday of the month. We will wait for the second Monday. Although price has tapped our key level, but we will wait for the second Monday because it's where we see the original moves in the market. Let me mark on the market price for you in advance. 18th Sunday 18th hour. We can definitely trade here. Okay, we can definitely trade here based on daily bias or weekly bias. But for monthly, we will have to wait for the second Monday open. It's called true open. Let the price action develop. We may see some liquidity sweeps as well. Because if price is going upside, it's want to go upside, it will trigger the buy stops and sell stops and then to the original direction. Okay, now we have taken out enough liquidity and we will wait for the structural shift. We do have a structural shift at this price and it's my standard deviation. So according to our standard deviation, this was our key level as well. The price is targeting exactly the same level. And you can see it's Monday open and we have got the structural shift after Monday open. So now it's the weekly bias for this week. This was our weekly bias, but it's the second week of the month. So like after the second month, the second Monday of the month will be the second week of the month. Okay, so this is our second week of the month and this weekly bias will eventually convert into our monthly bias and monthly power of 3. So for me, this will play out very nicely and I personally play monthly bias, monthly power of 3 in this same way, exactly the same way. Okay, we have the price in our key level at a very, like what I say, a nice day and time. But what do I wanna see? Yes, it's a nice big thick candle in daily time frame. This is what I generally want to see. I want like liquidity sweep with pressure, with a pressure move. So basically this is kind of my entry. What I will do here is switch into the lower time frame and wait for the market to close above it. Yes, it does. And if we see an SMT here with cable, otherwise this is not still a low strong close above it. Yes, we have now creating another wick. So that's important that you should have to wait for the confirmation. It's very important. Below equal lows. And now this is going to be our entry point. As soon as we see a close above it, this is our entry point with stop above it, stop below our PDRA. Okay, stop below our PDRA, and that's our entry. So how we use the divergence here? This was divergence basically. GU didn't tap into monthly fair value gap. It's itself is a divergence for us. Then if we switch into the lower time frames, left behind liquidity pool and check it out. Sorry, low plus higher low. In euro, what do we have here? In euro USD, we have a low, then lower low. It's our SMT confirmed. We will just wait for strong confirmation. If you are a monthly trader, if you are a long-term trader, position trader, then you should wait for the price to close above it. At least the first, the open price or just high of the price. So let's wait for our position trading entry point. Okay, as soon as price has closed below above it, above the open price, you can trade. You can trade, and this is like price is giving you the chance. As soon as price has closed above it, this will be your inversion fair value gap, and you can trade straight away as well. It's better to trade as soon as you see the close above your order block open price, and you can place the safer stop loss here. Plus, if you want a tight stop loss, then you can place your SL below the candle, that has created a fair value gap. At this point, it was looking like a fair value gap because we were not anticipating market to come all the way down to the rebalancing area. So this is how you position yourself. This is how you move yourself from low time frame to high time frame, and how you look at the market, plus changing your daily, plus transforming your daily narrative to daily bias to weekly bias and eventually to monthly bias. So looking at that, we have our drawn liquidities 1, 2 plus the last one. So these are our drawn liquidity, and if I Fibonacci apply the Fib, then we will have a reaction like kind of a good retracement from this liquidity sweep, maybe possibly a reversal as well. Okay, from this area we can expect a nice retracement or maybe a huge retracement. Okay, and above it we have this one as our main drawn liquidity. Considering pound had the exactly same scenario, almost exactly same scenario as that of euro liquidity pool. Yeah, you might see these like wicks, but I want strong manipulation. Market makers do the strong manipulation, and of course they have left this liquidity pool. They have swept it, and it was kind of a liquidity sweep already as well, but that wasn't a strong liquidity sweep. So considering this pair in, then we will have the exactly same scenario. I'm just like starting from monthly. FVG drawn liquidity price wasn't creating any fair value gap while coming into this fair value gap in monthly time frame. In weekly, we see very low momentum to our sell side because Dixie was already going to our sell side, and on these pairs we should have been bullish. On daily time frame, we have liquidity pool clear out with a heavy, bulky, thick candle, and a close above it will itself be an entry. So wait for the close above it or even its open price, but that's very close price, like open and close are very near. Then I will use the like open and high, sorry, open and high price. This was our entry, and nice move to the upside. Of course, we will seek the first round liquidity, the nearest one, and then the equal highs all the way up to this level, because these are all equal highs plus this one as well. So this is pound example. Let me drill down it in each one time frame. So again, Feb, and second Monday of the Feb. I guess this is first Monday of the Feb. Where's second Monday of the Feb? Okay, this is the second opening of the Feb. Then this is just like kind of continuation liquidity sweep. At the moment, this is a very huge structural shift for me, so I will apply the Fibonacci on the last swing. If you check it out in M15, there will probably, definitely will be a nice swing. Check it out. Yes, we do have it. So this is gonna be our weekly profile, weekly power of 3 in cable. Plus we do have SMT with euro, that will be another strong reference confluence for us going and targeting the high buy side liquidity. If I apply the Fib again for you for calculating my target, then 1, 2, 3, I'll wait for a nice, yeah, 2.5, nice retracement into the structure, and 4 level achieved. After that 4, we will apply the Fib on the higher time frame, and let's see what are our targets. 1, 2, 3. So I will apply the Fib here, and from this zone, yeah, we can potentially target all the way up to 1.30511. 305. That's all for today's video, and you can check out the US dollar index analysis as well. Based on these analysis, we can have clear bias on the other pairs based on our view, our analysis on Dixie. So that's all for today's video. Thank you for watching the video. Make sure you are subscribed to the channel in order to get useful content like this. And if you aren't in the group, you can join the group, even the Telegram channel. There's some issue with my Telegram channel. I will try to sort it out, but still we can use the WhatsApp group. Thank you very much. Goodbye, folks.